Welcome to ValueVest Daily, where we deep dive into the best value and momentum investment opportunities. All right, today we are on the hunt for a monster return, a potential 5x, and our target is a company called OSCR Health, a high-tech insurer that's looking to completely shake up the trillion-dollar healthcare industry. So let's just get right to it. The big question on everyone's mind. Can OSCR Health, that's ticker OSCR, actually pull off a 5x return for investors by 2030? I mean, is that even possible? That's the multi-billion-dollar question we're here to figure out today. And you know, when I say a multi-billion-dollar question, I am not kidding. For OSCR to 5x from where it is today, we're talking about a future company worth over $20 billion. So the first step in our investigation, our first clue, is to really understand what we're dealing with here. Okay, so let's lay out the basic numbers. Right now, as of early December 2025, OSCR Health has a market cap of about $4.7 billion. Now, to get that 5x return we're hunting for, that number needs to jump to over $23 billion. That is a huge leap. So the real question is, how on earth could they get there? Well, let's start following the clues. All right, clue number one. This is the big one. It's really the core of the whole investment story. See, OSCR isn't your grandpa's clunky, slow-moving insurance company. No way. Their secret weapon, their real moat, is this incredible technology platform they built from scratch, and it's designed to completely change the game for how you and I experience healthcare. And here's the best way to think about it. It's like the Apple versus Android of health insurance. Seriously. OSCR's like Apple. They've built this fully integrated system, the hardware and the software, so to speak, all under one roof. It's seamless. It just works. Now think about the old school insurers. They're like Android. They're just patching together a bunch of different software from different companies on these generic systems. And you know what that means for you, the user, right? It's a total nightmare. Fragmented, clunky, inefficient. This is where OSCR's advantage is just massive. So let's pop the hood on this high-tech engine, shall we? First up, you've got something called Oswell AI. This thing is an absolute game changer for doctors, cutting their clinical documentation time by around 40%. Then there's the Plus OSCR platform. This is so cool. They're actually selling their tech as a service to other providers, which opens up a whole new B2B revenue stream. Underpinning all of this is some serious predictive modeling to prevent disease and control costs. And it's all locked down tight with trade secrets. This isn't just bells and whistles, folks. This is a real sustainable edge. Okay, so you've got all this fancy tech, but does anyone actually care? Oh yeah, the proof is in the pudding. Look at this Net Promoter Score, which basically measures how much customers love a company. OSCR's is an 87. An 87! The industry average is like 40. That's not just a little better, that's in a different universe. This means people love using OSCR. They're creating a brand people are loyal to, which leads to fantastic word-of-mouth growth. Look, a great story and happy customers are fantastic, but you and I know that for a stock to 5x, the math has to add up. So for clue number two, we're going to follow the money. Let's dig into the financials and see if they back up this incredible story. All right, looking at the financial vitals here, it's kind of what you'd expect from a high-growth disruptor. Yeah, the trailing PE and return on equity are negative. That's because they're just hitting that profitability milestone. But here's what you really need to focus on, the forward-looking stuff. Analysts see a forward PE around 32 for 2027, totally reasonable. And this is huge. Their debt-to-equity ratio is super low, and they're already churning out positive free cash flow. That right there, that's the rocket fuel for growth. And if you want to see that growth in action, just look at this chart. It's insane. OSCR's membership has been growing at a compound annual rate of 37% over the last 3 years. 37%. Now look at the old guard. United Health, Humana, they're puttering along at 5 or 6%. This isn't just growth, this is them actively stealing market share, proving that their tech-first model is super scalable. And you can't talk about this story without talking about leadership. This is a massive piece of the puzzle. They hit their first profitable year ever in 2024. And guess who's steering the ship? Mark Bertolini, the guy who used to be the CEO of Aetna. So you have this incredible tech startup energy, but now it's being guided by a seasoned industry veteran who knows exactly how to make money in the insurance business. That is a powerful combination. Okay, so the tech is amazing, the financials are improving. So what's the market think? For our third and final clue, let's check the market's pulse. We're going to see what the smart money, the big institutions and the company insiders themselves, are actually doing. Wow. Okay, this chart tells you a lot. Look at this. Over 80% of Oscar is owned by either big institutions or company insiders. But that insider number, almost 25%, that is really high. It means the people running the show have a massive amount of their own money on the line. They win when you win. That's what we call skin in the game, and it's a huge vote of confidence. All right, let's switch gears and look at the chart. From a technical perspective, the stock is sitting right above some key support zones around $16 and $14. But here's the big takeaway. It's trading above its 200-day moving average. For chartists, that's a classic sign of a long-term bullish trend. The next hurdles to clear, that resistance up at 18, and then the big psychological level of 20 bucks. Now let's look at momentum. The RSI, or Relative Strength Index, is hovering around 43. Basically, anything below 30 is considered oversold, and anything over 70 is overbought. So right now, we're smack in the middle, neutral territory. This could mean the stock is just catching its breath, consolidating before its next big move. And what that means for a potential investor is that you're not chasing a stock that's already parabolic. But I gotta give you a heads up, this is not a set it and forget it stock for the faint-hearted. Its beta is 1.27. All that means is that the stock is about 27% more volatile than the overall market. So when the market goes up, it tends to go up more. But when the market goes down, yeah, it tends to go down more too. You gotta have conviction to hold this one for the long haul. Okay, no investment case is all sunshine and rainbows. So to be fair, we have to look at both sides. We need to weigh the bullish catalysts that could send this thing to the moon against the bearish risks that could absolutely crater it. And this pretty much sums it up. On the bull side, the biggest catalyst is political. If the government extends the ACA subsidies, which make insurance affordable for Oscar's customers, it could add almost $1 billion to their top line. Huge! But the bear case is the exact opposite. If those subsidies go away, their target market could shrink by 1/3 overnight. This is the definition of a high-stakes bet where Washington, D.C. has a lot to say. So where does Wall Street think this is all headed? Well, some of the more bullish analysts see 25 bucks within a year. But let's look further down the road. By 2028, the average target is in the $30 range. But for our big 5X question, look at 2030. The consensus is somewhere between $79 and $99 a share. Now we're talking. So what does that actually mean for your wallet? Let's put some real numbers on it. If you put $10,000 into Oscar today, based on that average analyst target for 2030, it could turn into nearly $47,000. Now, okay, that's not quite a 5X, but it's a massive 368% gain. And it puts that 5X goal right within reach. So we've looked at the tech, we've followed the money, we've read the market's pulse, and we've weighed the risks. It's time. Let's put it all together and answer the $20 billion question. So, the final verdict. Can Oscar 5X by 2030? The answer is yes, it's possible. The math on the bull case works out. But, and this is a big but, it's not a slam dunk. It needs everything to go right. Perfect execution for management, sustained profits, and, most importantly, those ACA subsidies have to stick around. So who's this for? It's for the long-term investor who can handle some risk. The recommendation from our source? If you own it, hold on. If you're looking to get in, maybe wait for a dip into that $14 to $16 support zone. And I'll leave you with this one last thought to chew on. When you really get down to it, is a bet on Oscar Health more than just a bet on a single company? Is it really a bet on the entire future of American healthcare? Okay, and you know the drill. This is not financial advice. Everything we've talked about today is purely for educational and informational purposes. You absolutely have to do your own research before making any investment decisions. If you got some value out of this deep dive, please make sure to subscribe, like, and share ValueVest Daily for learning totally unbiased daily opportunities before you put your money to work. And hey, one more thing. If there's a stock you want us to break down next, just drop the ticker symbol in the comments below. We read all of them. Thanks for watching, and we'll see you next time.